But I think that we saw some figures coming out of China this week, Jeff, for not just the second quarter, but also the first half of the year, which showing some encouraging signs of recovery.
Yeah, I think that's right, and there's a lot in that, both in terms of the politics that are at play at this point in time, and how we and how our managers need to be thinking about that, and the implications that has for asset prices and asset markets across the globe. But if we maybe put that to one side just at the moment, and if we think about what happened in China this week, we all know that China was the first one into lockdowns that were associated with COVID-19, and it's been coming out faster. So if we look back and we think about some of the charts that Matt and Chris have used for chart of the week over the past number of weeks, we've looked at PMI data, so purchasing managers indicators, which are usually and in historical sense have been a good guide to what happens with economic growth going forward. And we've seen a good recovery in the Chinese data points, and we've seen that earlier. And that has fed into giving us an indication of where GDP was going to be in the second quarter. GDP grew about 3 and a bit % year on year in the second quarter. And that follows the -6% fall that we saw in Chinese GDP in the first quarter, which was, I think, the first fall since the late 70s. Now, we can debate whether we believe the data or not and how it's sustained like that, but we'll put that to one side. For me, I think the interesting dynamic within the Chinese data was just, yes, we've seen an improvement in the industrial side of the economy in China, the manufacturing side, and that has both been for domestic consumption, but also for our external consumption. So exports have remained relatively, not robust, but they've remained in positive territory, at least through this period. But the other side of it was retail sales and what's happening in the Chinese domestic economy. And from that perspective, it's been a bit of a slower recovery. Retail sales are still negative on a year-on-year basis. And so for the first 6 months of the year, retail sales have fallen relative to they were last year. And I think that speaks to a couple of things around how people's psychology is influenced by COVID-19. So we look at restaurants, we look at cinema data, and we look at that reflected in the retail sales numbers. They remain very weak, so it takes people time to get confidence back, and it is safe, in inverted commas, to go and do some of these activities that they did previously. And I think that could be quite instructive for how we all think about the US economy recovering, European economies recovering, the UK economy recovering, that it takes time. And I think that's the one thing that's been evident from that data points that we've had from China.